Good morning, good afternoon, good evening, wherever you are. This is Two Tokens again, this time from Amsterdam. It's June the 29th, I think. And
29th.
To my left, we have Jonathan Fry, Johnny.
Good morning.
And to my right, we have Antony Abell.
And with a broad Canadian accent.
Good, Canadian by birth. And we promised to call ourselves, with the first name. You're Tony and you're Johnny.
And you're Alex.
And I'm Alex. Welcome. So today we are here to end the first Masterclass series. And Johnny, you were invited to tell people about the companies who are actually applying tokenization. And hence, your presence here, Tony, with your company. Can you tell us a little bit about your company called, it's TPX, right?
Indeed. The top co is called Universal Trust Me Engine Limited, and the name gives it away a little bit. So our DNA was absolutely in the token economy and the blockchain environment. But the actual trading arms are the TPX property exchanges. And we set out in 17 to focus on making property a liquid tradable asset class. To taking an illiquid object and making it liquid, which only our blockchain technologies can really do.
So wait a minute, 2016 you said?
Indeed. We started early. We started off as a blockchain company focusing on supply chains and blockchain enabling pharma supply chains, that sort of thing, looking at shipping and a few other things. But then we realized that the biggest game in town, so to speak, the most intriguing part of the entire industry is when you can take an illiquid asset like property and make it a fully liquid tradable asset class. So it's where the real world meets the token economy. That's what we found very interesting. We weren't great crypto fans, but we do love those intrinsic value assets and moving them as if they were cryptos.
Johnny, you and I, we were there in 2016.
Yeah, I thought it was 16, 17. I thought I wasn't there then.
It seems like 100 years, by the way, Tony.
It does at times, I freely admit.
Yeah. So are you telling me you now have a product or a service that tokenizes real estate, real property?
Yes. So there's a funny story behind this, and I like funny stories, particularly for all those listening in. We actually went to the FCA in 2017, our Financial Conduct Authority in London, and we went in and asked to be regulated. They fell off their seats laughing because they'd never had anyone come in and ask to be regulated like we had. Because we realized in 2017 that ultimately the blockchain environment, the blockchain economy as such, is going to have to end up in a regulated environment. And so we're fairly prescient in that, and the FCA accepted our case. And even though they didn't have the primary legislation by which they could regulate us, they agreed that we could work with them, and we have been doing so ever since. So we had 2 case officers assigned to us, and we had a slow, informal relationship with them ever since. And they're very keen to see us in the marketplace for the economic impact that we have on the marketplace.
So, which means you have a service, you are up and running.
We did an MVP back in 2017, to be fair.
The MVP was in 2017.
Yeah.
Okay, so that's 80 years ago.
Yeah, that feels like it.
2017.
Okay.
Let's just put the 2000 and just go. I think what's really interesting, the reason I asked Tony to come and talk about TPX is there's a lot of people talking about the tokenization, the digitalization of real estate. And to be quite honest with you, we don't really need it because we've got REITs. REITs have effectively created unitized vehicles. And if you issue a REIT at $100 million, let's say, it immediately will be trading at something like 10, 15% discount. So I think it's really important to understand this isn't the tokenization necessarily of a collective like that, but it's enabling the tokenization at the land registry level. So it means that I could actually buy 10% of your house or 1% of your property, and then my name is on the land registry. So when you sell your property, I get 10% of your house, whether it's gone up or down.
So you just got me to it because that was my next question. Why tokenization, right?
It's very fundamental. We have a view, we're macroeconomic guys, which I'm afraid makes us a little boring at times. But macroeconomics and looking at the long cycle, and we anticipated in 2017 a double-digit inflation period lasting potentially up to a decade. And we knew this was going to happen, which is where we find ourselves now, of course, in most economies. So we always knew that every time this happens in history, economic history, you always end up in an asset-based economy, where there's only really one asset that makes sense if you're moving back to an asset-based economy. and that is to use property. So if we can apply our new technologies to this and using title of property, which is fundamentally different from a security in all the jurisdictions we're deploying, it's fundamentally different. It's a transaction between two individuals, property transaction between two individuals is not a regulated activity. And so we very carefully built our exchanges to map precisely to that, and then worked with our regulators throughout that process. We've even got to the stage where our regulators introducing us to other regulators. So we did a top-down approach to this to preserve the title of property and to take that very title of property and turn it a liquid tradable asset to such a degree that it can outperform our current payment rails. So we're using our title certificates to buy our Starbucks coffee directly. And that's very interesting because if you're moving to an asset-based economy is largely inflation resistant based upon property as the real estate asset inside that asset-based economy. And you end up with some very different dynamics operating in our national economies, our global economies, if you move to an asset-based economy, particularly when you're trying to fight a very high inflation rate.
Okay, the law. How does this work? June 1st, we had a symposium. It was with several professors, and they actually said tokenization and property law don't really go well together. And you're doing something here that's opposing their view. But we also came to the conclusion that there's two parts of the world, English common law.
Yes, I have to confess here.
And the rest.
And the rest.
Having taken legal opinions from barristers, former directors of Land Registry, chairman of the Mortgage Lenders Association, working with the Prudential in London, we've taken some very careful soundings and legal opinions on this, inevitably, and then tested this with various legal firms around the world. So I'm afraid in this particular instance, English common law has a slight advantage, is that it is very strong on property rights and digital rights and individual rights associated with property. So on that basis, it lends itself incredibly well, from our point of view, to a digital asset-based economy. So we can take the title of property, small, enumerated, down to the penny, utter transparency, and allow people to use that directly in the payment platforms through some of the new technologies that we're using these days, which the institutions are using. So if you take a Uniswap, or automated market maker, that provides 24/7 liquidity for the asset. So at any time you wish to use it, it's as good as cash. It is cash. And our market mechanism gives the real-time pricing for that
So
asset.
does this mean that there's very little that needs to be changed in the civil code?
Yes, well, when we built all this, we very carefully mapped it to existing workflow processes. So when we're defending this, we say, well, where's your primary legislation? Where's your secondary? Where's your case law? I said, well, fine, we're very happy to take it down that path, because arguably in the UK we have over 120 years of that that fully supports our business case. So title, in its smallest possible unit, is something that we've created in this process, and the laws already fully support the use of it.
So, Alex, I think it's a couple of things I'd like to pick on there. First of all, what they're doing with tokenization, if you're a real estate owner, you own a flat, you own a house, you can effectively unlock some of the capital in your property. So that may be fantastic for estate planning. It may be good if perhaps you need money for medical purposes. So there's a lot of people who are asset rich and cash poor. There's also increasingly a younger generation who just can't get on the property ladder. So this enables them to be able to have maybe a couple of thousand dollars, yen, pounds worth in one particular jurisdiction, one particular town. It also means that property owners, say in London, rather than having £1 million worth of house in London, you could say, I think I'll actually take 20% out and put it in perhaps the West Country, perhaps put it in Scotland, maybe buy something else. I diversify your assets. So I think that's one thing which is where this is actually quite interesting. And we have a product or a service called equity release. The equity release market is predicted to be worth something like 30 billion a year. But typically in equity release, I actually give you money as an insurance company or a bank, and then you as the homeowner have to pay me interest on what I've effectively borrowed. And then over a period of time, I could find out, well, I own as the institution of your house, and you've got nothing of it. So I think that's an interesting one there. But going back to the property law, and I think this is really important, English law is actually used in over 80 different jurisdictions. And akin to that, and I know a lot of the work Two Tokens have been doing with people like the Port of Rotterdam, actually the digitization of bills of lading.
Yeah, the bills of lading that, and actually it's already in the House of Lords in England, so it's going to pass, as in legislation, I think next month even. And
Yep.
whereas here in the Netherlands, it takes a lot longer to change the civil code.
But the Netherlands will be able to use. Well, look, 80% of global trade is conducted using English law.
Yes.
Right or wrong, that's just the way it goes. So once you've got some legal clarity, then different jurisdictions can bring in their own regulatory clarity if required around that. But what we're seeing is an advancement of the laws and the regulations to enable the digitization, the tokenization of paperwork in this case, or in TPX's case, of actually effectively tokenizing property. But again, I stress at the land registry level.
Because there's a registry, but in countries where there's no registry, no land registry, it would be more difficult. Countries like the Netherlands and England, we have this land registry, so that would make it easier. Right?
Indeed.
You still have that central depository that we in effect tokenize.
Yeah.
Right. But as another subject, because this gets nerdy, right? So we can have the lawyers and the techies, but how about the socio-economic impact? Have you?
Well, we're part of the sharing economy. So not to turn this into an advertisement, but we very much focused on some of these new thinking systems and how they can operate, and differentiating between the value of money and the value that we have in a society. And so we very much focused on and this is quite solidly in our DNA. We're very keen to make sure the system we leave behind us works a lot better than the one we inherited. So if we can move to an asset-based economy, we believe that we have a number of major effects in the economies in which we deploy. One, we reduce significantly inflation. New monetary policy tools for central banks, the ability to do quantitative easing in different ways, to effectively soak up and absorb the excess cash that is the principal cause for the inflations that we have in most of our
And that's
economies.
locked up in all these illiquid assets.
Well, partially, yes. And inevitably, if you look at the UK, 56% of the money currently in circulation in the UK, digital money, all money, M1, M2, is produced by the housing industry. And the problem is that a major cause of our inflation, and it's a reason that also it's very hard to kick the habit for our political systems and our economic systems, because ledger money is a principal means by which most of our financial institutions create their own money. So, and that's what they lend to other people. So it's endemic. But in terms of the social economic good, we're very much focused on this because A, it allows the pensioners who are trapped with asset loan, land rich, cash poor, or property rich, cash poor, to access a more fairer, equitable form of equity release. And we think inherently the current form of equity release is patently unfair because it steals wealth over time and leaves a lot of the pensioners and the families that they've worked so hard to protect and enable, it stops them from inheriting that wealth.
So
And
it's
that's very
interesting that, because the Two Tokens Foundation, as you well know, Jonny, was asked by the government to come up with a broad analysis of the impact of tokenization on the economy at large, and how, in this particular case, the Netherlands stack up to the rest of Europe and, Britain, Singapore on the Thames, right? So, but it would be interesting to see, your project here, your little project. It's actually a big project.
It's big. It's global. We're launching
You're
20 exchanges.
global, huh?
Yeah, we're launching 20 exchanges over the next 18 months. We have
20?
exchanges over the next 18 months. We have launch teams in a number of U.S. cities, forming in Canadian cities. We're looking at European cities. That's part of the reason we're here in Amsterdam today.
Good.
Alex, I'm interested. Can you tell us a little bit more about the masterclasses? Because obviously this is the 6th one. You've asked us to sort of put together a number of different speakers and examples of international case studies and why should we kind of bother. But can you just explain for perhaps listeners that don't know that much about the masterclasses, a bit about Two Tokens and a little bit about why have you done the masterclass and what do they cover?
Yeah, so we never introduce ourselves, do we? Tony introduced himself, and Jonny, you didn't introduce yourself either. But Two Tokens been around for 4 years, as you know, and we were started by experts, for experts and companies interested to adopt tokenization. And as we went along, from masterclasses and working groups, we created a lot of knowledge, and people want to learn. And it's not just people who know nothing. No, it's knowledgeable people. It's people who are practicing law, barristers, who are working at the bank, who are in government, who are entrepreneurs. They want to basically upskill everything they know about tokenization. many people think that tokenization is the same as blockchain, is the same as crypto, right? But we here at the table know that that is not the case. There are many different forms of tokens. There are many different use cases. In a way, it's the oil of the digital economy, right? And so that's why we took it upon us to start a series of masterclasses. It's a series of 6 afternoons of 5 hours each.
And what have they roughly covered so far?
So they cover, the first 2 sessions are done by Oliver, whom you met. And it's really the fundamentals of tokenization. We look a little bit at the technology. We look at smart contracts. We look at the different types of tokens that are out there, right? A very important part of the masterclass that's a separate session, is on value engineering. Before you can even think about a token, you need to first figure out, what's my business model? Who are the stakeholders at the table? What value are we transferring? Before you can even, if you have that figured out, only then can you start to define the token taxonomy.
Absolutely.
Right?
Yep.
And people usually do it the other way around.
Yes.
Let's start with Ethereum, let's start with the
Yeah,
technology, and then at the end, oh, wait a moment, we have to rethink our business model. But that's actually the very first thing you need to do. And then, of course, with the help of CMS, where we are today,
And their lovely offices here.
lovely offices here in Amsterdam, we do a firm legal review. Of course, there is markets in crypto assets, MiCA regulations, there is MiFID II, there is a transfer ruling, there's all these different regulations. And people think that for tokenization, MiCA it covers all, but it's not the case, right? We know that here.
It's a start.
It's a start. And so rather than trying to be theoretical about it, in all the class, for 3 months, in these 6 classes, there's always use cases to support the theory, right? So we have a use case on how to do a utility token to help an association with members. We had a security token to raise money, and on a regulated exchange. So all this theory, if you will, is supported by real examples.
Okay, and Alex, I'm really keen to emphasise that. Well, let's look at the facts. The facts are that the cryptocurrency market is $1 trillion-ish, and okay, don't want to sort of play down. $1 trillion is a lot of money, but it's insignificant when you look at the repo market, let's say, which is actually trading $1 trillion or $3 trillion a month. So, and then you look at, say, the equity market, that's something in excess of 120 trillion. We look at the real estate market, 326 trillion according to Savills. You've not been fishing in the crypto pool. You've done some real examples in business, working with the Port of Rotterdam, in terms of their bills of lading and trying to make that whole much more efficient between Rotterdam and Singapore in Asia. Can you just share some of the other ones that you've also done that are very much in the real business world and using the technology for commercial purposes?
The reason for that is that you and we were there with the ICO wars. Remember? No, and so that's all good and well. We wanted to see how we could use this for adoption in the real world, which meaning the fintech, the financial institutes,
Energy,
agri-tech, logistics,
share registrars,
and so to do that, we wanted to really stay away from crypto coins because they were kind of tainted, and they weren't important. They are important. There's definitely innovation coming from there, but we wanted to have the real world get ready for that change which is upon us. It's not going to go away. It is coming. And so how do you do that? If you can inform people about this, and it will go in one ear, out the other, I always tell people. But if you want to inspire them to use those innovations and implement them, you have to just show them, and do it. And that's why we do these masterclasses. We do them with banks, some major banks in the Netherlands and in Europe. One example was tokenizing invoices.
Yep.
Basically, how can we finance your revenue and in factoring and tokens every invoice and have investors pick it up. Another use case was tokenizing solar panels and have people own part of a solar field and in terms of a green bond, tokenized green bond, and you get your return. But now the next level is, of course, not just tokenizing the asset, but also tokenizing the offset, kilowatt hours or carbon credits. And so there's all these, it's like a rabbit hole, right? You dive in and you go deeper and deeper, and all these new business cases come forward.
Okay, so it's interesting. Sorry, I didn't introduce myself. I run a business called Team Blockchain, and we produce, as you know, a weekly analysis looking at how, where, why, and who are using blockchain technology and digital assets. So it's trying to, as you know, give little case studies and say, okay, this is what's happening in the agriculture sector, the fashion sector, the music sector, the finance sector. And the reason we don't focus on just one area is because different businesses can learn what's happening in different areas. As we've said before, we've got the situation whereby effectively blockchain technology has been around since the 70s. It came to wide-scale adoption really with Napster, file sharing, which got shut down. And what we're now seeing is that technology, it gave rise to ICOs, which some were legally questionable, let's be honest with you. But now it's being adopted by governments themselves. So we've got 90% of governments looking to bring out some form of central bank digital currency, not to replace cash. And I think this is really important. It's just to give another option, because if you can move money around faster, cheaper, more efficiently, and more compliant, well, that has to be good news, for society as a whole. There's something like 700 billion a year of remittances. So when we've all gone from, CMS's offices today, there'll be a security guard. There'll be cleaners that come in. Some of these are the poorest paid members of our society. And they want to send money back to their family and friends overseas. And at the moment, they're being charged on average 4.5%.
The issue at hand is, Napster in 1999, became Spotify, right? And then there was an innovator there. His name was Steve Jobs. Who introduced the iPod, right? So, but that took better part of 20 years before it became mainstream, right?
Yep.
A Netflix started with shipping videotapes and later on CDs in envelopes before they started a streaming service. And so these innovations take time. It's not a quick fix. It's a generational thing. And in order for us to help those different industries, adopt those, we have to educate them. And that's why we started these masterclasses.
But I would also suggest that there's a certain number of exigent requirements that are driving some of the adoptions of these technologies. Johnny's quite right. You mentioned speed, efficiency. We are in a double-digit high inflation environment globally. That's going to be with us for a while. So these alternative versions, these different types of ways of looking at these problems, some of these technologies are unlocking those things. What we're doing with property actually started in 1640. The French did it with the assignats. Benjamin Franklin did it in America when the British insisted that all the gold went back to America. They didn't have any money, so they needed to create their own. They used property. So it's funny how the circle turns. And once again, we're in a set of exigent requirements, I'd argue, where it's forcing us to adopt these technologies. But what's nice about these technologies is they work a lot better, faster, more efficiently, and more transparently, and increasingly better governed now. That actually, this can be a sea change in the way that we conduct a lot of our commercial activities. And that, I think, is something that we should all welcome.
Yeah, and so it's upon us that we change our narrative that we've had the last 10, 12 years. And the narrative was, of course, there was a lot of techies and people that were very passionate about it. But now it's us that we need to convince the people who are not that passionate and not knowledgeable and take them by the hand and show them that this is not scary and this is actually going to solve. And by the way, for what it's worth, it's not about technology, right?
No, exactly. This is it.
The technology, that's the easiest.
Yeah, the technologies now is, in the blockchain DLT space has become incredibly stable.
Yes.
We now have the Goldman Sachs, the JP Morgans all using it. Whether they fully admit it all the time is another matter, but they are using it. And a stablecoin environment where you can do transactions in milliseconds that used to take weeks.
Yeah.
So now all of a sudden, some of these things are already here to stay, and they're using them because they're so much more efficient than some of the old technologies.
Yeah, so 2 tokens is kind of, they call us a think tank. I like to see us as a do tank. We invite you all to join us in these masterclasses. We can do them, in your local city. We can do them for, but it's important that you you learn, you share, and you come together, because there's not one answer.
Yeah.
And this isn't over yet. We only got started.
But Alex, the other thing I would stress is that actually, if you're listening to this and thinking, I don't really follow, what does this all mean? Just Google blockchain plus whatever industry you're in. It could be finance, it could be, I don't know, fashion, it could be advertising, and I think you'll be very, very surprised to see the number of not just theoretical scholarship papers, but the number of companies that are getting involved and are committing resources. We know with the work that we do with the banks and the asset managers, behind the scenes, some of the biggest banks in Europe and America have teams, 30, 40, 50, 100 people working on about to roll out the use of the technology.
The thing is, it was not fashionable to use crypto, right? Because the regulators didn't like it. So then we used the term blockchain. That's out of fashion also now, right? Now, of course, everybody talks AI. I think. So it's not in fashion today. But let's look at it. Whether it's metaverse or blockchain, or it's decentralized technologies, trusted technologies that are used to create the society for the future, and it's on us to educate those people.
And Alex, that word trust, I think, is a often misused word. But if there's one thing that blockchain technology can give you, it gives you better transparency. It gives you greater clarity. And with clarity and transparency comes trust. And that's why you're seeing governments and regulators, because they're beginning to realize that with greater transparency, it has all sorts of advantages and benefits. It wheedles out the nefarious actors, but it helps to actually make the system much more efficient and better for society as a whole. So this isn't just a pure finance play by any means.
No. With that said, thank you so much. We're going to do the masterclass now, and
You've got to put your mortarboard on.
yeah, well,
And your ermine.
it's actually you who's going to do the masterclass, not me.
Oh, yes, I forgot about that.
So you should do that.
Thank
Thank you so much.
A little bit
and,
of
Tony.
we'll have you for the next podcast.
All right. Thank you very much.
That was it for today's podcast. Thank you for listening in, and please subscribe so you don't miss out on our upcoming episodes. If you want to get in touch with us, you can find our contact details at www.twotokens.org.